This is NEO on the monthly chart. And for whatever reason, price does not want to get to this $6 level. For some reason. Macro picture, this would be the makings of a double bottom. You have a mini double bottom that first was established back in June. So the buyers continue to defend this $11 level. I just want price to get down to $6 because that would be time to back up the dump truck. Now, before we continue with the analysis, let's look at this article, maybe to give us clues in terms of where price is heading next. So China-based EV maker NIO was recently added to a list of approved vehicle manufacturers in China. This is not really news. We know this already. NIO is the Tesla of China. The decision by the Chinese government will allow NIO, whose EVs are currently made by another firm, to manufacture its own automotive builds in the country. That I didn't know. NIO stock is slightly higher on the news. So China-based, not even going to attempt to pronounce the name. I'll try anyway. Anhui Jianghu Automotive Group. Let me know how you think guys did in the comments. Which currently manufactures NIO EVs, last month disclosed that it intends to sell the two factories that turn out NIO's EVs. In the wake of the news, rumors circulated that NIO could look to buy the factories and start making its own EVs there. That development could significantly raise NIO's expenses and cause its bottom line to sink in the near and medium term. Additionally, the move would reduce NIO's cash reserves, which stood at $28 billion as of the end of Q3. Now, this is good. We see a lot of the startups, EV startups, cash strapped, but this is a decent bag to fund operations well into the future. On the other hand, acquiring the factories would allow NIO to quickly ramp up its production over the longer term, likely speeding up its transition to profitability. Such a development, however, would require the demand for its EVs to increase quickly. Now in November, NIO's deliveries climbed 13% year over year to, say, 16,000 EVs, but they fell about 1% versus October. No big deal. What you want to see is year over year growth in deliveries. And on top of that, this was a difficult year as interest rates kept increasing. So comparing the numbers from last year, it's like comparing apples to oranges. In the first 11 months of this year, the automaker's deliveries have soared 33%. This is what you want to see compared to the same period of 2022. All right, so again, this is the weekly chart, and you have a lot of indecision past couple of weeks. You have rejection wicks, but you also have wicks on the bottom of the bodies of the candles. All this represents to me is that you have range-bound price action, but more importantly, you have the buyers in the side and the sellers still duking it out for position, meaning there's no imbalance between the buyers and sellers. You need an imbalance between buyers and sellers in order to move price. Let's scroll down to the daily chart. Now, what I was anticipating price action doing was just make another lower low and eventually get into that $6 level. But again, you have buyers continuing to defend this $7 price level. Nevertheless, you do have rejection wicks a bit more visible on the daily chart. But again, you have buyers protecting this $7 level. So there's no trade setup at the moment. A lot of sideways price action. For the bulls, that is bearish, meaning the momentum to the downside is waning. Now, if you get price to close on a daily chart above the 50-day moving average, that would be another sign, bullish sign for buyers. The last time that it did that was back in August. But it wouldn't mean that it would be time to go long. You want to see your momentum indicators pointing up, which is the 13 and the 26 simple daily moving average. So at the moment, it's a wait and see situation. However, if you believe in NIO longer term, you can start dollar cost averaging. Thanks for watching. Subscribe. Please like the video.